You may have seen this clown on YouTube talking about PayPal and how great of a stock it is.
See, that is got down like 10 to
Okay, be
12.
quiet. Yeah, this is just a bad stock. I wouldn't be buying this stock. If you look at it, had a really incredible uptrend in 2020, and so a lot of people look at that, like Jeremy Lefebvre. He sees that and says, "Wow, okay," and he basically looks at this and looks at where it is today and says, looks like I'm only paying $62 for something that was worth 310 at one time." And this is a very dangerous thing for people to believe, because often the trickiest thing in the stock market is really being under the impression that the past price means that it really is worth that today, so you should buy it cheap. Whereas if you think about it, it's very likely that PayPal has topped. Maybe there are just a lot of competitors. Let's look, for instance, I created I I actually created with Google Bard. I was able to basically get their net income, and we can see, okay, it's been growing, but as we can see, 2020, uh, I'm not so sure that it would really justify that huge move even in 2020, just based on, oh, that's just return on equity. Sorry. Uh, in terms of just their okay, let's see. Okay, this is their net income. As you can see, it did have a substantial jump in 2020. Uh, but at that after that, it really started to decline pretty dramatically. I mean, the return on equity is decent. It's not really going above 15 or anything, and it looks as though there is going to be a difficulty for PayPal going forward in terms of really making a substantial amount more in money, because it just seems like it's stuck. I think that so the price is really reflecting reality. People just want to believe different things, like these are different competitors to PayPal. Stripe, well, Venmo is not a competitor because they own that. Apple Pay is another option. Google Pay. There's Skrill. There's Square. There's Amazon Pay. QuickBook. There's probably going to be more of these kind of things. So you sometimes get these clowns on YouTube. They really think they know what they're talking about, but they're kind of dangerous because they're basically saying, "Oh, look, the stock is cheap. You gotta buy now because it's gonna go back to the moon." Let's see in just percentage terms what the net income is gone. It was going up like 22% per year in terms of their net income growth. But then things, after they had a huge surge, probably everybody started to use PayPal in 2020, so it went to the moon, especially because people couldn't go anywhere. But then there started to be a collapse in terms of how much people are using PayPal, and I would say a lot of it has to do. It seems to be self. It seems to be self-inflicted on their part. I think that for the most part, I think PayPal started becoming very arrogant, and they thought that they could impose crazy policies, just like censoring people if they post the wrong thing online, and they could fine them or whatever. So if you think about it, this crash is so much different than what happened in 2020. People are thinking, "Oh, it's like 2020. It goes down, and then you buy it and you make a fortune." Well, if you think about it, the crash on PayPal, it lasted about like a month. So it went down fast and then it surged. If you think about it, this has been going on for quite some time. When you have a stock that's going down for a long period of time, where people are saying, "Look, I don't want to own this," and there is no substantial move back up. You can see that this almost looks like a double top, and then there's every time there's an effort to get back up there, there's significant resistance, and this could mean that shareholders just know that there's something up. Like look at this volume. This is extremely above average volume here, and it keeps up even now. You're getting above average volume even after it's gone down so much. People are in no hurry to get back in. They want to sell as much as they can. Like look at this. This is above average. So the problem with people, especially new beginners, is that they're thinking about stocks in a very counterintuitive way, and I think that they're thinking that just because it's cheaper, it means that it's actually a good deal. Whereas I actually see extreme danger in this side. I mean, this is pretty volatile, up down and up around. Whereas if you look at prior downtrends that were constructive, like this is not that. I mean, it's there's a little bit of volatility, but it's not that dramatic. It had that uptrend. So even when COVID happened, it kind of was kind of it kind of broke the pattern slightly, but then PayPal resumed the uptrend. Whereas here you're getting an extremely harsh downtrend with no sign of it ending. So I think that a lot of people are being misled. They're buying this on the dip. Jeremy is even buying call options, which I think is a huge mistake. And we'll see how that turns out. But this is a big warning. Don't follow YouTube clowns. They don't know what they're talking about. You're going to lose a lot of money doing that.